Saturday, February 4th, 2017. Monaco 64 here, home of alternative economics and contrarian views. So I like to cover the technical outlook for precious metals, gold and silver, Bitcoin, S&P, sterling, the currency, the dollar index, and yeah, and I'd like to talk about what I think, the markets are set for this year and maybe also into next year. There's a lot of uncertainty and a lot of people have been wrong, people calling for a crash in the stock market, a collapse. And we haven't seen that yet. And, it's very difficult. No one can really predict things perfectly. And I'll try to give my opinion of what I think is happening at the moment. So first of all, though, I'd like to start out short term, what precious metals did this week. So gold, previous week on the 27th of January, Friday, 27th of January, we closed at 1191.50. Yesterday we closed at 1220.26. So that's an increase of 2.4% on the week. So it's a pretty good week for gold. Year to date in dollars, gold's still up 6.34%. So a good performance there by gold. Silver was up 2.08% on the week. So slightly underperformed gold. We closed at 1751 roughly. That's taking the 6 p.m. Eastern Standard Time access close on COMEX. Previous week, on the 27th of January, closed at 1715. Year to date, though, silver is up almost 10%. It's up 9.95%. In other currencies, that a lot of my viewers think in, like the sterling. Gold in sterling is up 5.14% year to date, so still doing well. Silver, XAGGBP, up 8.74%. And also in Canadian dollars, the gold's up 3.05% year to date. In Aussie dollar terms, it's also up 3.05% gold. So now dollar index. That's the other thing I want to talk about that's quite important. I'll come to the charts later, but the dollar index year to date is down 2.29%. We closed below 100 this week at 99.868. And S&P year to date is up 2.62%. We did close above 2290. And the Dow, of course, closed above 20,000. Sterling, we had a fairly steady week in terms of closing compared to the previous week. Previous week we closed at 125.48. That's cable. And yesterday we closed at 124.85. So down over 50 pips there. The indices and the mining indices, HUI index, still doing well. Year to date, we're up 16.35%. Closed the week at 212.12. XAU index, that's up 17.82% year to date. So now I'd like to look at the technical picture. I know a lot of people think technicals don't work in a manipulated market, but I think all markets are to some extent manipulated, and I think technicals do help, and I do use technicals. So first of all, we're going to bring up gold, and I brought a weekly, let's see, is it weekly or monthly? Yeah, it's a weekly chart going back to 2013. You can see there's a trend line coming from the top left-hand side to the bottom right-hand side, and that trend line is taking the high in 2011 and the high in 2012. You can see last year we broke through that line several times, and the last time we were above it was on election night, November 8th, as you can see there. And then we had the big correction the end of the year. We've rebounded. We closed the week at 1220. And as you can see, that Fibonacci retracement analysis I did there, from the high last year and the low last year at the end of the year, that move, the 38.2% retracement basically is 1219.62. So this 1220 level is fairly important, but this is the highest closing for the week in gold. And you can see that trend line's getting lower. If we get back, you know, above 1300 now, or even if you look at it next week, it's probably around 1280. So the other thing I wanted to talk about gold, you can see from 2013 all the way to 2016, we saw a series of lower highs and lower lows. But the low we had last year was higher than the 2015 low, and we made a higher high compared to the high in 2015 as well. So we do need to get back above 1375 roughly for gold to become, you know, to continue its bull market from the low in 2015 at around 1045. So that's the technical chart for gold. Let's have a look at silver now. So silver, that's a weekly chart as well. I haven't gone back as far. There's an interesting trend line there, as you can see, from the high. That was July 4th last year, above 21. We're very close to that trend line next week. It's pretty much where we are right here between 1750 and 18. If we get back above that level, that's quite positive. And as you can see, silver as well, you know, since 2010-11, we've made lower lows, but the low last year, you know, is higher than the low at the end of 2015, 2016. So that's encouraging as well in terms of the silver technical picture. And now let's have a look here at Bitcoin. Let's have a look. Bring up the chart. So Bitcoin, yeah, we have the spike earlier this year above 1100. We came down to 750 roughly. You can see the trend is still up. I personally think we can still see a lot of volatility between, you know, we could even go back up to 1100, but we could also come back down to around 800. My advice is, you know, stay long if you already have Bitcoin. If you want to accumulate Bitcoin, don't chase it. Buy it on big corrections down. So yeah, that's Bitcoin. There's the technical picture. So what else? Dollar index. I think that's an interesting one to look at, especially, you know, with the relationship to gold. You know, I'm wondering if what we've got here in the dollar index was a false breakout. You can see in 2015 we had highs above 100, which formed like a double top. But in 2016, since 2016 we've rallied quite well, and we got up to around 103 at the end of last year, around Christmas time. And now we've turned back down, as you can see, and we're back below that 100 level. And only time will tell whether it's a false breakout. It could be. You never know. You know, fundamentally, we've heard, you know, some comments from the Trump administration about other currencies, you know, like the euro and what the Germans are up to, and the Chinese. It looks like the U.S. administration does not want a very strong dollar, but the other countries also don't want a very strong currency. So the only currency I think that can help the U.S. dollar and the whole world is a neutral currency, and that's precious metals, you know, gold and silver. Still have to see about that though. So let's have a look at the S&P. S&P 500 here. I got a very long-term chart, and you know, if it was anything else, you'd say, wow, this looks really bullish, and it does. It does look very bullish, and but people still keep going on about, you know, there's going to be a crash, but I don't know. Could this be you know, a signal that we're going to have, you know, some kind of inflationary boom or even hyperinflation, and that the dollar index is going to go down and the other currencies are going to go down against gold, and the, you know, stock market is going to continue higher? I don't know. It's difficult to say. Loads of people have been calling for a big market correction, and it doesn't seem to happen. And I mean, look at Venezuela and Zimbabwe. They've had currency debasements, huge debasements in hyperinflation, and their stock market indices have done really well. So relative to their currency, but relative to real value, you don't know. So that's why with that in mind, I've looked at the Dow Gold ratio. So I'll bring here a chart, and this is more short term Dow Gold ratio going back a couple of years or so. And you can see we topped last December above 17.5, and it looks like it's turned down now. You can see the moving average as well is turning lower. So short term, it looks like we could see precious metals outperform the stock market. That's short term. Longer term, I'll bring up this chart here. 1 second. This is from goldchartsrs.com, and this is since 1800, the Dow Gold ratio, 200 years, and you can see there how volatile it's become, that ratio, since the Federal Reserve was formed. You know, in the 1930s, the Dow Gold ratio bottomed around 2. I think that's when the Dow was around 35, and Roosevelt revalued gold up to $35. And then we had, since from then till 1966, that ratio went up as the bull market in stocks, you know, there's a bull market in stocks. The Dow got up to 1,000 there, and the Dow Gold ratio, I think, was around 26. And then we dropped, not in a straight line, you know, we dropped almost to 1 in 1980. And then we got up to around 43, I think, in 2000. And the trend's been lower since 2000. We have had a correction. You know, the Dow has outperformed since 2011, 2012, as you can see, and we've gotten up to around 17. It looks similar to that correction we saw in the late 70s before another, you know, drop in the Dow Gold ratio. So are we going to see, you know, this could happen in different ways. We could see gold stay pretty much where it is and the Dow collapse, you know, to 1,000 or so, or we could see gold rally strongly and catch up with the Dow as you get more monetary, you know, debasement, more hyperinflation. Who knows? It's very difficult to say. Before I get to the subject of hyperinflation again, I just like to have a look at sterling first for my viewers. So the technical picture for sterling here is a weekly chart of British pound, and we closed the week lower, but I think, you know, we made a higher high this week and a higher low. For the last 3 weeks we've done that, so it's possible that the pound could continue to go higher. There's very good resistance around 128, I would have said, and you can see the support there around 120. Longer term, you know, the pound, the dollar, the euro, these are all fiat currencies, so I still recommend people hold on to their precious metals. I'm not saying the pound's going to go up against the dollar. Well, it might, but I'm not saying it's the best currency to have. I still think precious metals is the best currency. And talking about, hyperinflation, one thing that I've read about hyperinflation, especially the Weimar hyperinflation in 1923, is that you had a period of great political uncertainty. The end of World War I, the Kaiser in Germany was deposed and Germany became the Weimar Republic. You had the collapse of the Russian Empire in 1917. The Bolsheviks deposed Tsar Nicholas, killed the whole family. Austro-Hungarian Empire collapsed. It became a republic, broke up. Basically, political mayhem after the war, and that led to a lot of political uncertainty and the faith in the currency that's usually managed by, the state or government completely collapsed, and that's why we had hyperinflation. So the political aspect of hyperinflation was there, the uncertainty. And that's a very interesting point, because this is what we're getting now. I mean, if you tell me that the US is politically stable right now, I guess you're not, looking at the news and seeing the division there is between, the Trump administration and the establishment. And also in Europe, we're going to have some huge elections coming up in March 15th, the Dutch general elections. And Geert Wilders is expected to win, and he wants to leave the Euro or even the European Union. You've got, I think in April, Marine Le Pen in France, who's doing very well. These could, together with Brexit, this could discombobulate the whole political picture in the Western world. And that could be, the trigger for hyperinflation. We've got so much debt in the system, and if people have no faith or they don't know what's happening politically, they'll lose faith in the currency of these governments. And the same thing happened in the late teens, after World War I, early 20s. These countries had loads of debt as well that they incurred fighting World War I. So that's my view. I think it's going to be really uncertain. I'm not, and if there is a loss of faith in currencies, fiat currencies worldwide because of the political situation, the fiscal situation, holding on to stocks of productive companies that manufacture things, or mining companies, it could protect your wealth. But I still believe that gold and silver will be the best, insurance against hyperinflation if we do have it. And even if we don't have it, I think it's still a good thing to hold. So yeah, that's what I see going forward. And difficult, of course, to predict things, but we'll just have to wait and see. So if you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet, and if you like to donate, there's some links below in the description. Thanks for watching. Take care. Bye.